Mike Briggs is our cattle market analyst this week. Each month, Oklahoma State University surveys at least 1,000 individuals to determine consumer preferences and trends. It also tracks awareness and concern of food issues, listing Zilmax in its study for the first time this month. More on that issue later in the show. The pressing concerns for some in the beef industry are demand and consumption. With tighter beef supplies, meat can become more expensive in the grocery store. That's if people are willing to buy it. Oklahoma State's results for November 2013 show shoppers are now anticipating higher pork and beef prices and lower costs for chicken. They were also willing to pay less for steak and pork chops this month as compared to October, but willing to pay more for chicken breasts and wings. As for those raising the cattle, feeder market prices have been remarkably high with tighter supplies expected. The good news, though, for those in the feeding sector, the corn crop looks to be plentiful and the price is struggling to climb. When we talked with Mike Wednesday morning, I asked if he felt corn could drop even more.
I don't know if corn can go a whole lot lower. We've taken a lot out of corn. It's basically half the price it was last year. You've got the farmers have pretty good financial backing, so they've put a lot of the corn away, and I think they're going to hold. They all think they're going to get $5 for it. They're not. They're not getting it. But I do think because of that and because of the demand you have through ethanol and other things, I think you're going to see a continued strong basis throughout the year to try to keep pulling that corn. But I think if a farmer has a chance to get $4.50, he probably better think about taking it because there's no reason for it to go past that at this point.
Are you a big buyer where it is now, or do you wait for it to go a little lower?
I'm just going to sit and just go hand to mouth until the market proves me wrong going up. There's no reason to do anything as far as I'm concerned.
One of the concerns you mentioned before we started today was that the oil was being taken out of distillers' grains, and that's a concern that we heard last week at a nutrition conference as well. For the casual observer, tell me why that's a problem.
Because primarily why we like to feed distillers' grain is as an energy replacement, because it's very high in fat and high in protein. But if they're going to take the fat and or the oil out of it, that reduces the nutritional content quite drastically. So then at some point when the oil gets about so low, you need to have a different price differential between that and corn. And if they take enough of the oil out or the price is too high, its only use is as a protein supplement. And in our ration right now, that's all it's in there. It's in as minimal levels to provide protein to the animal, and that's it. And that's always been a concern of our cattle feeding industry is that, well, gee, here comes ethanol, now we're going to have higher corn prices, but we'll have cheaper distillers to offset that. Well, now you're not even going to have that. In fact, in some cases, distillers is priced above corn, and it may or may not have the nutritional value it had 2 or 3 years ago, so you're really in kind of a bad spot.
Right, and to switch off of that would be a significant change, right? Because it is a stable part of your diet right now.
It is, and we've all kind of forgotten. I mean, my gosh, we've been feeding distillers grain for 15, almost 20 years, and it's been so long since you just fed a straight corn ration, you don't hardly know how to handle it anymore. But we may be faced with that in the not too distant future.
Feeder cattle have been on a run here. Where's the top?
That's a great question, but as corn continues to erode lower, that fuels the feeder price, and if we can rebound these live cattle, that pushes it up that much higher because there's going to be so much competition for feeder cattle because we have so much bunk space that I don't know where the top is. I think the top, we haven't seen the top in the feeders yet, I don't think.
Could it become even tighter here?
Oh, yeah.
The supply I'm talking about?
Yes, because you've had your big fall run, that's starting to leak away, and then it's going to get really tight through the holidays, and then maybe you'll see another big push in January like you normally do. And then, wow, it's going to get tight till you start seeing some wheat cattle in March or May.
All right, what about selling here? That's a pretty good market right now, but is there any margin to be made?
I don't think so. I think we've beat this market up pretty good. I think we have a chance of a little post-holiday, post-Thanksgiving rally. Although, having said that, I also think we've probably seen our high for the fall. It's going to be interesting. Maybe we can tighten these numbers up a little bit more as we go forward. But we placed some pretty good numbers in that August-September area of pretty large cattle. Some of those cattle towards Christmas are going to start coming to the market. And our demand doesn't seem real deep. Beef is really high, so I don't know how high we can push that stuff.
Who's in the driver's seat there? I mean, are the packers able to dictate price, or do they need to fill orders as well?
I don't think packers can dictate price because I think they're in the same situation as the feed yards are, is that there's too much packing capacity, just like there's too much feeding capacity. And it's really hard anymore to equate packer margins on, you know, cost of cattle versus what they're getting for box beef, because there's so many branded beef programs, there's so much export, and they do so well with value-added products that we don't see. So it's pretty hard to tell what their margin structure is like. I think it's better than it looks, and they're going to want to keep processing cattle. That's a good question of who's in the better driver's seat. I don't think it's the packer.
So far this year, we've seen production numbers and slaughter numbers lower. That's to be expected, obviously. What do you expect, maybe as a grand scheme of things, to expect when the fourth quarter numbers would come out?
I think fourth quarter, you're going to see your tightest numbers of the year. Then you're going to see a little uptick in January and February, which is not always great because that's not a great beef demand time. But we seem to be able to push beef about so high, and that's it. And until we can blow through that level, beef has become a luxury item. How much shine you want to put on that thing, I just don't know. With the economy as bad as it is, I saw it on CNBC today. A Walmart opened in Washington, D.C., and they had 20-some thousand people interview for 600 jobs. So it's really, it's not a very good labor market, so I don't think the economy is as good as people would like to make you think.